Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Good evening and welcome to your Tuesday night stock fight. I'm Bruce Whitfield. You're watching Share Shootout right here on CNBC Africa. First in business worldwide. Tonight, we got defending champion from last week, Mark Witten from Kaizen AM. He takes on a formidable contender in Mike Haworth. It looks like everybody's favorite granddad, doesn't he? But he is from Applied Capital Insights and he is a street fighter of note. Our guests have pre-picked 3 shares. Neither knows what the other holds. At some point during proceedings, they must accept at least one of their competitors' stocks. The longer they leave it, the more likely they are to have to accept something they don't like. Each has got 30 seconds to argue their pick. We then interrogate their choice and it either gets shot down or accepted. More often than not, it gets shot down because that's the nature of the game. So let's let the share shootout begin. You do know that nobody's ever played in the middle has ever won? Okay, except for last week, I think, when you won. Other than that, precedent has been set. Mike, why don't we start with you because your picks are considerably more adventurous than Mark's are. 30 seconds. Sasfin, why?
It's a small bank. It's focused on the SMEs and entrepreneurial businesses. It actually is different to a big retail bank in that you've got to go to the retail bank. Sasfin goes to you. Therefore, they understand the risk better, and therefore their loan book is more adventurous. Their credit loss ratio is 0.5%. Their loan growth 16-17%. It's got a good private client wealth business and commercial
Stop
solutions.
there, please, if you don't mind. David Shapiro works for them, and I think he's sucking up to David Shapiro. I find it, for what it is, which is representing entrepreneurs, and it should be so funky and so exciting, but it's not as a share, is it?
Well, I think first of all, you've got that private client wealth model business is under a lot of pressure. The margins are under pressure, and I think the loan loss ratio, the 0.5%, if anything, if you're looking at the experience of the bigger banks, that to me should be trending upwards. I do think it is an exciting business. It does have a really great entrepreneurial culture, but from our point of view, in terms of what you're paying for, the kind of risk you're taking, not only from a liquidity point of view, but also going forward, how the bigger banks are going to eat into the margin of those smaller banks. Plus, at the same time, the South African consumer is sort of struggling, so the loan side of the business is going to be under pressure going forward. We do like the story that we have, like Sasfin. It's just outside of our liquidity mandate.
But do they take enough risk? If their credit loss ratio is as minuscule as that, they not being adventurous enough in their loan book, surely they can grow more.
Their leverage is 5 times, so there's certainly room to grow there. I think the management's inherently conservative, but you don't have to be super adventurous in this economy when the infrastructure and whatnot is causing so many problems for small companies. They have to go out and loan. I mean, they're small shopping centres now that can't get power, so they're having to get all sorts of new equipment to be able to power themselves up. And of course, Sasfin's the perfect example for lending them that. The big commercial banks don't do that.
All right.
So they thrive in these kind of conditions.
No, they should be thriving. Are they thriving? Here's a company with a market cap of 1.25 billion rand. It's got a multiple of 10 times. It's cheaper than the big banks, probably justifiably so. Ignore the liquidity, ignore the personal stuff. Consider that you may have to accept a real dog later. You like the story. Will you shoot it down or will you accept it?
No, I would shoot it down based on, what you just said, it's cheaper than the big banks. It's not really. Like for like, you can pick up, be it Nedbank on a turnaround story. It's trading on a 9 forward, better dividend yield, much better visibility of earnings, first rand, which always seems expensive, but yet their compound average growth rate's been closer to 15% over the last 5 years. So, I'd prefer to stick with the bigger guys who I think have got a stronger entrenched brand. I think that's been Sasfin's biggest problem from a management point of view is they haven't sold the brand enough.
Other than the fact that they've got the very useful currency thing on the side of the M1 motorway, you're shooting it down just for confirmation.
Shooting it down.
Shooting it down, you see. You thought you were a street fighter. He is far more aggressive, is Mark Witten from Kaizen AM. I'm interested in these 3 picks. You tend to go for themes. Last week, incidentally, I've got to pay tribute to you.
Yes.
You said that you went long on Woolies, you went long on ShopRite, and you went so short. You went like 30 centimetre high short on Pick and Pay. They then come out with a trading update recently. Although the share price hasn't yet reacted, this is a structurally
unsound business.
I don't want to be that vicious, but yeah, structurally defunct business.
Yeah, I think going forward, I mean, it's almost a short you want to keep in for the next sort of 5 years because of, well, the structural issues are there, and I think Richard Brash has got his work cut out for him. The problem is trying to fix a business when you've got no cash. It's one thing, you know, and the other side of it is that the brand is so tarnished at this point in time. Yeah. You know, so.
But anyway, good call last week, which is why he won. But you're going long on Anglo-American Platinum. Yours are made of platinum. 30 seconds start now. Okay,
so from our point of view, the platinum market will be constrained going forward. Whatever was in surplus is starting to work its way through. If you look at the latest Johnson Matthey numbers, auto catalysts are picking up, and as Euro 5, the regulation comes in, you need more grams per auto catalyst to be put into the motor industry. I think Chris Griffith, who's moved across from Kumba, is a great manager. I think taking the 300,000 to 400,000 ounces out of the platinum, out of MPact itself, will ensure going forward, and it's from the higher cost operations, and they can sell platinum forward at currently higher prices. So I think all net, it's just very oversold and a bit of a value play.
There we go, 30 seconds are up. Is it a significant enough value play right now for you, Mike, to accept it, or would you consider shooting it down?
No, I'd shoot it down.
Why?
Yeah, I think there's a marked, well, first of all, Europe's in trouble. I don't think the car market's coming back that quickly at all. I agree with the regulation change. That is going to kick in.
Yeah, and you agree. I saw you nodding vociferously in agreement when you was talking about the new management, of course, Chris Griffith coming out of Kumba and going into AngloPlat. So there are positives here.
There are positives, and there need to be, because I mean the business is in quite a lot of trouble, and I don't, with all the consultation with government, there's still no solution properly found about the labour situation. This is an ongoing thing. It's not tidied itself up properly at all. And the other big question mark now, with commodity prices, you've still got these high operating costs coming through. So your margin's getting a little bit squeezed here. And for me, one of the big dices to be rolled now is the Japanese yen weakening like it is, and the enormous amount of capital flows coming out, spilling into our market.
Before you finally cock the bolts on the rifle, do you cock the bolt? No, you move the bolt, whatever you do. I should know this. This is Share Shootout. Defend those vicious assaults on the integrity of your pick.
I agree completely that the labour is very militant and there's no clarity or visibility in government regulatory issues, etc. But 80% of the stuff is found within the sub-Saharan African bushveld complex, which is, MPact is not going to be expanding capacity. They're actually going to be staying flat. If anything, they're going to be reducing. MPact is taking capacity out. So all we're saying is that going forward, the industrial use for platinum is there, and the auto markets in China are really, they're coming through. There's going to be massive growth there. And the demand for platinum as an industrial asset is going to increase. Therefore, net, it's a geared play on platinum.
But you're worried about the value trap.
I think in the short term it's a value trap, and I buy what Mark's saying 100% in the medium and longer term, but not now.
Share Shootout, shot down, boom, you're gone on Anglo-American Platinum. No, it's too late now. The line is drawn. You actually really only get 30 seconds to defend your picks. Let's go then, Mike, to your second pick, which is perhaps even more adventurous than Sasfin. You're going for MPact. It's one you like to talk about quite a lot. 30 seconds.
Yeah, it's the old Mondi paper business. It is 75% paper, 25% plastic. For me, there's a congruence of a major theme. Urbanisation is creating this massive decentralisation of retail. There's a huge amount of packaging required on a secular basis because of this. It's tidied the business up dramatically. Working capital ratios are way down. Cash flows are up. It's de-geared the balance sheet down to 29% gearing. Forward PE of 10.
Okay, other than the really odd name, which is kind of hard to say, MPact, does MPact have impact when it comes to an investment choice?
We actually took part recently in that capital raise in the unbundling. And as much as it was more of a specific opportunity, I think what we've discussed now is reasonably correct in that I do think that there is opportunity in the packaging space. We've never liked the paper business because we see a move towards, and this is more of a packaging business, but that business, that sector itself, has always been under pressure with very strongly rising inputs, and there's no ability to pass the pressures on to the likes of the retailers, etc. But that being said, it is a reasonably well-run business. It does have a decent underpin in terms of a dividend yield. So there is a bit of a cash flow story there for us, which is what we like. which is one of the reasons we took part in that. So,
but you look at MPact, and MPact's had a great run. It's in good shape. AngloPlat recently came out with a disastrous-looking trading update, really uncomfortable. They don't have a management team in place. They say they've got a CEO in the wings. We wait to see.
Yes.
And then MPact perhaps is, if you're looking for an opportunity in their packaging sector, maybe it is the opportunity.
It might be. Look, I mean, these businesses generally are not great business models because they have massive cost inflation and they, like I said, are unable to pass it on. I think where they've positioned themselves well is that they're not trying to be all things to all people. They're staying very focused on a specific sector of a segment of the packaging space.
You know what I like about this? You criticise his share and he nods. You concede that this is not the greatest pricing power business model in the world.
I concede that, but if the Rand story is going to start playing out and the Rand does start strengthening on these capital inflows, there's some cost help before you start. But to me, the big deal about these packaging companies, we always, in the old days, back in the 80s, we always used to look at these as being early cycle companies. They don't play that game anymore. This is about a secular trend where you've got decentralization of retail, you've got a massive amount of goods moving to all these various places, so there's a huge logistics requirement apart from anything else. And then the pack sizes are decreasing because there's an increasing number of households. Lots more packaging.
I like his argument, and I think you do too.
Yeah, I'd say, you know, it's definitely a better, in my mind, a better story. I have some kind of visibility compared to Sasfin. I don't like the Sappies of the world. I've never liked the AngloPlats, which are more plastic focused. So I think this potentially is one that, you know, for a value play that could take a few years, like as you say, it is a late cycle play. This is
gets
not
the
a
thumbs
story.
up, does not get shot down.
Yeah, we'll get the, well, I'm not sure what the third pick is, so I'd rather take this.
That's always the strategic choice.
I can live with this. I'm not sure I can live with the third one.
You can look at yourself in the mirror tomorrow morning and say, I didn't pick a complete dog. So Mike, you survive on that one. Your MPact pick has sufficient impact to be picked. Good. Let's go to Mark Witten's second pick this evening, and clearly you're a huge fan of the man who left Kumba Iron Ore to go to Anglo-American Platinum, because you think Chris Griffith has left Kumba Iron Ore in a really solid position, despite the fact that the iron ore price looks like it's going only one way. 30 seconds.
Okay, well, I mean, if you plug in the numbers of iron ore at $135 and the Rand at 880, and the Rand's higher than that as the iron ore price, you get close to 60 Rand in earnings. A 50 Rand dividend, which is, in my mind, a 9% forward dividend yield is not something to be sneered at. I think the margins are great in that Kumba is a small percentage of global production, and the moisture content in their iron ore is very, very low, so the Chinese just love it. So they'll always have an ability to sell. I think from our point of view, we just think it's a well-run business with great assets, and the cash flow is why we like it.
Okay, now you've got to explain something to me. The moisture content of our iron ore. Obviously, I mean, I understand it from a seed perspective. Yes. Dry mealies are lighter, therefore you get fewer per tonne. Well, you get more mealies per tonne. Iron ore, I suppose, there's less mud and muck in there.
Well, basically, it's that as well. Number one. Number two, when they put it onto a ship, the higher the water content, it becomes more slushy, if that's the right word. It can cause ships to capsize. But number three, in the winter months, if the Chinese, when they stockpile it, the higher water content means the ores freeze, so they can't feed it into their stockpile. So they like Kumbas because it's being in the deserts, in the northern Cape. The iron ore content's like 30% versus the global average of closer to 50, and in some cases Indonesia's 60 and 70%, which is basically, as you put it in there, it turns to mud.
I've just got some great dinner party trivia. Thanks for that. Right, Mike, Kumba Iron Ore, you can't shoot it down.
I can.
Okay, well, show me how.
Listen, I fundamentally like the business, but I think at the moment there's certainly some pressure on the iron ore price. There's a lot of talk about looming oversupply coming from not only China but Australia and Brazil.
But it's inevitable, isn't it? In a boom market for iron ore, as we have seen, supply comes on stream. Lots of supply comes on stream.
Timing issue.
The pressure then comes onto the iron ore price. I think their target price is $90 a tonne or something on iron ore.
I think Goldman Sachs for 2018 are talking $80 a tonne. But so that's the one component to it all. I think the other component is that they are moving into a deeper part of their mining lease area. So there's more overburden to be stripped. So the costs are going to go up just because it's getting deeper. So I think that just the combination in the short term, again, this is longer term, if things stabilize and whatnot, I mean, I really do like the business. But I think there are a combination of factors in the short term which tell me that I wouldn't go for it.
But he's picked 2 shares so far. You shoot this one down, you're obliged to pick the third. You understand that as part of the game, do you not? And despite that,
I'm sure he's keeping the best for last.
well, you hope so. So you're shooting down Kumba Iron Ore.
I am.
That's a courageous shooting down. It's a very courageous shooting down. So we're going to stop here for a minute or two as we just look back at what we've discussed this morning. Mark Witten from Kaizen AM. He talks about Anglo-American Platinum shot down mercilessly, gunned down in a drive-by. Kumba Iron Ore also blasted into oblivion, 150 billion rand company. The share price has been under a huge amount of pressure, but it's got dry iron ore. You see, you learn something every time you watch the show. And then Mike Haworth from Applied Capital Insights, Sasfin got shot down. Terribly nice, terribly good business, a little bit dull, a little bit too little visibility, and better options, says Mark Witten, in the banking sector than Sasfin right now. But MPact does get the thumbs up, a reluctant thumbs up, because he doesn't know what's coming up next. I do, you don't, so stay tuned as we take that break. More Share Shootout on the other side of this.